Hey there, speculators. It's Rod, your Futures Fanatic. Welcome back to Futures Fanatic, part of TDG, the Traders Dev Group, financial education for active futures traders and self-directed investors. Hey, I'd like to thank all the new subscribers that have recently joined the channel. And if you're new here and it's your first time here, if you dig the content that you're going to see here, which is going to be how to learn a futures trading strategy for the MNQ, which is the Nasdaq 100 in under 15 minutes. It would really help us grow this channel if you hit that subscribe, like, and comment, turn on the bell notifications, and you can find out more about this trading strategy, which I'll be going over today right after these messages. All right, so what we're going to do today is we're going to learn a futures trading strategy for the MNQ, the Nasdaq 100, and this is to sort of celebrate a small, teeny little milestone of 1,000 subscribers to this YouTube channel, and I've been getting a lot of positive feedback about the fact that we're kind of avoiding the hype cycle and clickbait and things like what's happening in the markets right now. I'll try to make this evergreen by not mentioning GameStop. Instead just focus on techniques and strategies and approaches to learn what I believe is the best market for active day trading, which is not the stock market. There's nothing wrong with stocks, nothing wrong with trading stocks. I say that all the time. But if you can learn a little bit about the futures markets, you're going to find that for intraday active trading, for no pattern day trader requirement, for being able to start with less capital, for being able to get access to trading capital a lot easier, you're going to look at the futures market. So let's talk about a trading strategy tonight, and hopefully also I'll introduce you to a new way of looking at the markets in terms of charting, a visual price pattern, and a bar type that you might not be familiar with. Okay, so the strategy is going to be called the TET Offensive, or Trade Every Turn. That's the name of the strategy, and here's our ingredients. You are going to need one part, the NinjaTrader platform, which is free. Check the description below for all the elements that you'll need if you'd like to follow along with this particular strategy. I'm not going to spend a lot of time going through whether these bars are available on other charting platforms, the bars that we'll talk about in a while, which are called the NinZa Renko bar, which is also free. Check the description below for how you get access to it. You're also going to need futures data, 2 free weeks. You can get that as well from the links that we'll provide. And then you're going to need an exponential moving average, which is pretty standard and you get on any trading platform. I have seen bars like this on Sierra Chart. I've seen bars like this available for TradeStation. Unfortunately, they are not available for TradingView. TradingView is my favorite trading platform for charting and analysis, but it's not the trading platform that I use for active scalping and for this trade every turn offensive, because this is what a Renko bar looks like over on TradingView. It's a very standard bar. I'll go through the differences between the Renko bars we're going to use. Okay, so again, you're going to need NinjaTrader 8 platform, download it for free. You're going to need the NinZa Renko bar. You can download that for free. You're going to need the futures data, and you're going to need an exponential moving average. Okay, so the trend bar is the name of the actual bar. So when I say bar, you can think of it like a candlestick. In just a moment in the presentation, I'll show you the difference between a standard candlestick, which many of you are probably familiar with, even if it's your first time to this channel or you've followed the financial markets at all. Anytime you're looking at a chart, the vast majority of the time, that is a standard Japanese candlestick. There are some variations that are being shown now, like Hakanashi and some others, but for the most part, it's a candlestick. It's a candlestick that is set to a certain time period, 3 minutes, 1 minute, 5 minutes, 10 minutes, 30 minutes, etc. What we're going to be using for this strategy is something called the trend bar. And here are some other names for it. The Brickwick, which is the name me and my trading partners gave it about 7 or 8 years ago. NinZa Renko, which is what the company that you're going to download the free version of it from. It's also called Supreme Renko, a modified Renko, or a Flex Renko. Okay, but essentially the strategy is dependent on the actual bar. There are many trading strategies that use candlestick patterns and a visual price pattern to determine when to enter. That's actually what the strategy is made up of, the price action of the bar. This is a similar one, although I think you'll find these bars a little unique. So here's what a 3-minute candlestick looks like. I'm not going to go through how to interpret a candlestick in a lot of detail. There is plenty of information on the internet that you can you can use, but I'll use my cursor here to essentially say, when you're looking at a candle like this one, for instance, if it's green or bullish, this is the open, this would be the opening price, this is the low, this is the closing price, and this is the high, all right? And it's green when the closing price of the 3 minutes, when the price closes higher than where it opened. So again, this is the open, This is the close, and the wicks represent the total range of that particular bar. If it's the other way around, this is the open, this is the close. And if you're not familiar with those terms, open and close, that simply means right at that 3-minute mark, the first print, it opens, the candle opens and begins to print, okay, and it begins to flash on your screen and move up and down, and then this would be a down candle, okay? These are fine. I use them a lot for other types of charting, and this is typically the type of candle that you're going to look at. Now, in just a moment, I'm going to show you the exact same time period and the same price action, except on our brick wick, okay, our NinZa Renko. This is a 10x1 NinZa Renko, and this is what you're going to have to download and get access to if you'd like to follow along with this strategy, which again I think is going to be pretty unique, especially if you're a stock trader. You might not have ever seen a bar type like this. And yes, it is available for stocks. You can chart and look at things like Apple, the SPYs, and the Qs, and I do. What you want to do is hit that like, subscribe, turn on bell notifications, leave a little comment, because I'll probably get into that in a next series of videos where I go into a little bit more about how you can apply this exact same thing to something like Apple, Qs, SPYs, and I pretty much can guarantee you, and there's not a lot of things you can guarantee in trading, nor should you, that you would be one of the very few people looking at price action this way if you were trading Apple or any stock using this type of approach. So this is a 10x1. These are ticks in the futures market, but this could be 10 cents in a stock like Apple or Tesla or any other stock. All right, so this is the visual look of the exact same thing. There's the 3-minute, okay? Little harder to see trend than something like this, okay? So that's why we call it the trend bar, okay? Now here's the definitions of our trading strategy. We're going to talk about a color rotation, which we're going to call a turn. That's going to be 3 consecutive bars. I'll explain that a little bit more in just a moment. And that's going to be following an R bar, okay? The R bar is the rotation bar, 1 reversal bar plus a wick. Again, I'll describe that visually in just a moment. And then you're going to need a 233 EMA, or what we call our T-line or trend filter. If you followed along here on the channel very often, I will mention this concept of a T-line or a trend, and normally it will be a 233 EMA on whatever time frame or whatever bar we have that applied to. So in this case, we're using this modified Renko bar, and you're going to use the 233 EMA. Before I go too much farther, I'm not going to spend a lot of time on what a standard Renko looks like, but what you can do is come over here to Investopedia. Investopedia is definitely your friend, and what's great about Investopedia here is they're actually showing a Renko off of TradingView. So you can see this is more like what a standard Renko is. And you can read about it right here. It was also supposedly developed by the Japanese. Renko meaning brick. That's why Orenga meaning brick. That's why we call it the brick wicks, because there's wicks and what look to be like bricks. And without getting too wonky here, actually even having a wick on a Renko chart is a newer thing. So that's something that was added by a bunch of different charting platforms, but you still don't have the same kind of smoothness and an ability to define when new bars open, close, and the way they look with these standard Renkos. You need the modified Renkos, and I'll tell you why you need these modified Renkos when we get into the actual trading strategy. Okay, so those are our definitions right there. Now let's just take a look at some actual visual versions of what those are. So the first thing we have is what's called a reversal bar. All right, so it's very clear to see that this is trend. The market is going up. The market is going up. If you are a little bit more of a stickler for specifics, and there's nothing wrong with that, you might be asking yourself, does this mean that price occupied all of this movement on each one of these bars? The answer is no, which again, without getting into back testing, and that'll probably be a video for another day, these particular bars don't work very well for automated back testing because you're not getting a true open and a true close. We'll go through that a little bit, probably not in tonight's video. But for the purposes of what we're looking to do, the reversal bar is completely accurate. The only time in which price has actually occupied the entire range that's shown here visually is when you get a reversal bar. Okay, so you can see right here, that's a reversal bar. It's a wick, and the close of the bar in the opposite direction comes down, another R bar, etc. Okay, so hopefully that makes sense. A reversal bar is going to be just what it sounds like, a change of trend, a short-term change of trend where the market reverses and it goes from a wick. In other words, it didn't have the initial tick or tick increment required to close a new bar. Instead, it reversed and came down and moved far enough in the opposite direction to begin to form a new trend. Okay, so that's our R bar. Okay, the next thing is we have our color rotation, our CR. This is what it's called a turn. Hence, we're going to be talking about trading every turn. So here's our turns visually, okay? 1, 2, 3. The third bar, this is our turn. We've now had a color rotation or a color turn from bullish to bearish to now a bull trend to then a reversal and the other way. Now you can start to see how we're going to build on this concept of trading every turn. Trading every turn. Every single time the market turns, we're going to place a trade. With some exceptions based on you have to pick a point in time that you start, and there can be some filters that we might want to apply for trend and things like that. But let's just really quickly go back to our concepts. The reversal bar, okay? The reversal bar indicates when we're going to start to look for what? The color rotation or the CR, which we would see right here. Now, let's get into our strategy rules. Okay, this might look like a lot, but once you see it visually, it's actually pretty simple. Okay, we're going to pick any point in time during market hours. Okay, we're going to do this during market hours so that we're going to get more looks at actual reversals and movement. Right now and probably for the rest of time, the markets are very, they have a lot of velocity to them. They're moving very quickly, especially during market hours. So you're going to see plenty of color rotations. Now, the futures markets, one of the reasons we love the futures markets is they do trade 23 hours a day. So absolutely, you can look to trade this strategy or back test it or forward test it, not during market hours. But if you want to see the most amount of turns, that's why we're going to do it during market hours. Okay, we're going to wait for that 3-bar color rotation. At the close of the third bar, we're going to buy, bid, or sell, ask. Here at Futures Fanatic, we never, ever hit the market button. It's like the most evil button you could possibly ever have. Yes, you can close or exit at market if you want to get out of a position, but we don't like to generally use the market button to get in. Okay, I don't want to be too disparaging. There are strategies where it's, excuse me, fine to use a market if you want, but when you're scalping, you want to try to buy the bid or sell the ask depending on the direction you're going. We're going to trade one contract if it's CT or counter trend. We're going to trade 2 contracts if it's with trend. That simply means when the turn occurs, is the price above or below the T line. We'll look at that in just a second. We're going to place our stop 2 ticks above or below the R bar. We're going to have a minimum of 1-to-1 risk reward, 1-to-2 preferred. A trade is entry to exit, and then we're going to rinse and repeat. So let's just take a look. Okay, so here is a time in which we're going to enter the market, right? We just have to pick a period of time, and we're going to take our first as a with trend trade above this T line. Again, this T line is a 233 EMA. Each of these bars is 10 ticks long, and you could also think of this as 10 cents if you were trading something like a stock. Here's our entry right here. Our stop is going to go below the R bar right here, and our target is going to be 2 times our risk. All right, so I didn't measure it all out here, but here's around where our target is going to be. All right, so we're now flat and we're looking for the next turn. Here's our next exit. Here's enter. Here's our stop. And in terms of sizing, I didn't say, well, no, I did put it on here. Look at me. That's a pretty good slide. Enter 2 contracts. Why? Because we're above the T line and we're trading with trend. Here, we're going to enter 1. Why? Because we're trading counter trend to the actual overlying trend. Okay, so this is trade every turn. We've traded a turn here, we traded a turn here, and of course, for demonstration purposes, I cherry picked 2 trades that worked out right here. All right, now the next thing we were going to do is we would manually backtest this randomly for 15 days. So let me go ahead and come in here and give you a sense of what this sort of looks like as I just kind of come back and manually backtest, right? But the first thing we have to do is we have to just pick a spot in time, and you're going to end up sort of cherry picking one particular spot in time, and it could be something like this, right? Now, this is actually a 12 by 2. All right, so now let me spend just a brief moment here explaining. Let me see where we're at on time, because no one likes to spend, I said 15 minutes, and we are at, just about 15 minutes. So we might have to do a part 2 here. But let me right click, go to data series here in NinjaTrader, and I'm going to indicate what we got going on here, which is this is what makes these Renkos different than a standard Renko, and probably something you're not going to be able to get on any platform except for TradeStation, NinjaTrader. I think there's a version of them on Sierra Chart, but I haven't seen them anywhere else. They're not on TradingView, unfortunately, yet. We tried to program them, but they don't give us the right access to tick data over on TradingView. So here's what makes these Renkos different, and here are the settings that you can mess around with. In fact, I'll use the last part of this video just to talk about messing around with some of these settings, because you can see visually, you can kind of find the sweet spot of what works right for you and what your eye is drawn towards in terms of trend, in terms of how often a new bar prints and things like that. So this is a 12 by 2, which would mean 12 ticks, and a new bar is formed when it moves 2 ticks in the same direction. Okay, 2 ticks in the same direction. If you were going to get an R bar here, you would need 12 times 2, 24 plus 2. You'd need a 26 tick reversal in order to actually reverse and get another bar. So right here, if I just hit OK, these are 12 by 2. Each one of these bars is exactly 12 ticks long, and in order to reverse and go the other direction, you're going to have to get 26 ticks. All right. So if you're not familiar with the futures markets and tick increments, absolutely hit the like button, because man, you're learning about a whole new thing, and you will find out here at Futures Fanatic all about ticks and how tick increments work per instrument. If you've never really traded these before, you can instead think of these as cents. So each of these bars is 12 cents long, if you will, and it would take 26 cents in the opposite direction to actually reverse and start forming bars in the opposite direction. All right, now let's just quickly look at an example. We are above the T line. This is our third trade. We trade right here. Okay, you're going to measure your risk down here, 2 ticks below this bar, and you're going to need to get at least 2 times your risk. That's probably a winner right there. Okay, probably a winner right there. Now, if you're going to literally trade every turn, this is a sell right there, counter trend with smaller size, and you are stopped out right there. Okay, you can see, and I want to point this out, this is a trading strategy where if you are completely, absolutely trading every single turn just to sort of learn and practice, repetition is the mother of skill, there are going to be periods in which you will get chopped up, especially if markets become a little choppy while they're trending in certain particular directions. But this in here is kind of a bit of a chop up fest. What you're really hoping for is that you're flat by the time you catch this next move, in which case your stop is down here at this swing and you have another nice winner there. We can just continue to move forward, and you could see how often you have some nice with trend winners, at least in this particular move right here. Okay, so that's going to be it for tonight for the trade every turn. Lots going on here. Let me just recount. Yes, a couple things here very, very quickly. So first, the NinZa Renko, check the descriptions below. You're going to go to ninza.com. You can just search for Renko, and you're going to come up with something called free NinZa Renko. Okay, free NinZa Renko right there. I do not want to be disparaging, because obviously I do offer certain products and training and things like that, but some of the prices associated with buying like upgrades to this is really not necessary as you learn this particular bar. The free one is absolutely fine. Okay, so the free NinZa Renko is absolutely fine. You're going to get that NinZa Renko. Remember, you can find out more about how Renkos work by looking at a Renko chart at Investopedia. If you really get interested in back testing and the true open and close and how you can use these bars for more automated type of trading, you might want to look at something called shark indicators, because here's an example of the way the Renkos will look on our chart, right? Here is a example of the way a Renko looks, a standard Renko, and here's their testing Renko. So now what they're showing here is visually exactly where it opens and what price look like intra-bar, inside of these bars. Okay, all of this is the same exact data. Let me see if I can scroll up. Okay, this is the way our NinZa Renkos are going to look on our chart. It's all we need for trade every turn. This is how they're going to look if you want to allow the computer to actually properly back test them and understand where price is in every particular bar. And then this is what a standard Renko looks like, which to me is not all that useful, right? You're not going to get, you can see this doesn't have wicks. It definitely removes some of the noise and gives you a better look at trend, I believe, than some candlestick charts. but it's not going to be what you're going to need for what we're going to do with trade every turn. All right, that looks a lot like what the Renkos look like on over here on TradingView. All right, so we will leave it there for tonight. Hopefully this was helpful. I'm finding I want to experiment with different types of content. If this is not the kind of stuff you'd like, and just generally more education and just higher level things about trading platforms and futures markets, I can certainly do that as well. But I want to try to get into some details about actually how me and my trading partners have been fortunate to develop some strategies that work very well for us and continue to work even as the markets get more and more random. So ideally, this is something that's useful for folks. All right, we'll leave it there for now. This is Rod, your Futures Fanatic, reminding you to stay green, trade like you mean it. We'll see you at the next update. Thanks.